Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. Welcome to my video series where we tackle the tough personal finance questions asked by Australian expats. Now today we're talking about estate planning. Don't turn off, I know it's not the most happy or pleasant of topics to discuss and deal with, but it is an important one when it comes to Australian expat estate planning. Today I'm going to walk you through the 8 common mistakes that we see Australian expats make when it comes to their estate planning. So let's get into it. The first common mistake that we see Australian expats make is only having a will back in Australia. Now of course this could be made much worse by not having a will anywhere, but many make the mistake of assuming that their will in Australia will cover all of their wishes for their family in Singapore or elsewhere in the world. Now, while both are Commonwealth countries, and quite often your Australian will would apply to your assets in Singapore, you may find that the process of getting probate granted in Singapore is a lengthy and expensive one. Now, this can particularly be the case if you have fixed assets in either jurisdiction. And by fixed assets, I mean property. If you have property in Singapore, you have property in Australia, you have shares, you have cash in either jurisdiction, make sure that it's very clear whether your Australian will is going to deal with it or if you have 2 separate wills to cover your separate assets in each country. The second common mistake that we see Australian expats make is not having your power of attorney documents in place. Now, power of attorney, I'm specifically referring to nominations for those typically loved ones, partners, family members, to make decisions when it comes to our health and financial well-being when we're mentally ill or incapacitated and not able to make those decisions for ourselves. Now, if we had those documents in place in Australia, do they apply in Singapore or do you need to have other documents in place? Make sure that you do your homework here and make sure that you're making smart decisions when it comes to your power of attorney documents. The third and most common mistake that we see people make when it comes to their estate planning is putting it off to another day. Now, it's always easier to do something tomorrow because that way we don't need to think about it right now. But as someone who used to be younger and thought he was invincible, I can tell you that if I can get it done, you can too. Make sure you're at the very least getting a will in place, get your power of attorney documents done. If you have children, make sure there's guardianship in place. We'll get to that one a little later, but make sure you're at least covering the basics and get it done today. The fourth common mistake that we see Australian expats making when it comes to their estate planning is failing to consider the tax implications. Now, for some of us, we might think, well, if I'm not here anymore, who cares? But what you may find is that there are significant tax burdens faced by your beneficiaries, which can often be our surviving family members. Is our son, daughter, wife, surviving husband going to get hit with a huge tax bill because we haven't considered the tax implications of passing assets on? Now, given this is a tax consideration, I would certainly recommend seeking professional advice. Speak to your accountant, speak to your financial planner, make sure that you're putting the right framework in place and make sure that tax is considered also. The fifth common mistake that we see Australian expats make is just assuming that their superannuation will be covered by their will. Now, superannuation works a little bit differently to our other assets in that we can have a separate nomination in place to have our super paid to our beneficiary directly. Now, this might be our surviving family members or someone else, but we can have either a binding or a non-binding nomination in place to ensure that our super is paid according with our wishes. Now, it's important to consider the tax implications here again. If super is paid to someone who's considered a financial dependent or someone who's considered financially independent of us, could have a significantly different tax outcome, so make sure you're seeking professional advice here. The sixth most common mistake that we see Australian expats making is forgetting to update their will. Now, I cannot tell you how many times we've had the conversation with clients and other Australian expats all over the world where they've still got ex-spouses nominated as their beneficiaries in their will, simply because they didn't update them, or children from previous marriages that are no longer in their lives. Make sure that you review your will, at least on a regular basis, every couple of years I would suggest, as a basic rule of thumb, and make sure that they do accurately reflect your current wishes. The seventh most common mistake that we see people making when it comes to their estate planning is being far too specific in nominating beneficiaries. Consider a simple example. A particular individual has 3 grandchildren and nominates those 3 grandchildren by name in his will. Now, he doesn't change his will and sadly passes away, and his assets are distributed to those 3 grandchildren as he nominated in his will. Now, unfortunately for the other 2 grandchildren that were born after he originally designed his will, received nothing. What could have happened instead is the individual could have simply listed grandchildren as a collective group to receive those assets upon distribution. But sadly he didn't. So again, be very careful when you're looking at how you name your beneficiaries and how you outline for your assets to be distributed. The 8th and final mistake that I want to cover today that we see Australian expats making is failing to keep a secure list of their assets and their liabilities for their executors and for their family members. Now, this can be particularly problematic for Australians who've lived all over the world. We might have shares in the United States, bank accounts in the UK, MPF in Hong Kong, CPF in Singapore, property in Australia. If there isn't a list, how on earth is our executor going to be able to find them? Now, commonly what would happen is our executor would go to a lawyer's office and the lawyer would help them find those assets for quite a significant fee. Instead, what you could have in place is a secure list that they have a copy of, or at least know how to find, and then they know exactly where to go in the event of your passing. As a bit of an aside, I would certainly suggest keeping your social media account logins either in the same place or in a separate list, because that way they can be taken offline quickly if something happens to us. I hope you found these 8 tips helpful today. I hope they've shed some light on some of the common mistakes and some of the things that you can avoid as an Australian expat. Thank you very much for joining us. If you have anything to add or you have any questions that we haven't yet covered, fire them through. We'd love to hear from you, and maybe we can even turn them into a future video. Thank you again for tuning in, and I look forward to seeing you next time.